Traders, welcome to the Power Trades University Monday market opening live rotation. S&P 500 crash and burn, possibly maybe UAW strike, high interest rates discussion.
that, that's an SEO title for you, Jason. You got it all in
Hey, listen, welcome to the show. If you're brand new here, I'm stock market coach and option trader Jason Brown. We got Coach Sutton in the building, and we just came off our live event that we had. I almost want to say it's a 3-day live event, but it was a 2-day live event with a bonus day where we did happy hour, spent some time with our members. And man, what an epic event that was to see everybody in person, get the hugs, get the high five, shed some tears, talk about the stock market, dream, talk about our goals. What man, it was just epic. Anything you want to share about that, Coach Sutton?
there. As a custom through the pandemic, we've gotten to doing these Zoom conversations. There's nothing like being in the room with people because the topics and the emotions and the connections just can't be replicated online. And so it was just great to get back into it like that.
Absolutely. So let's talk about what you guys are all here for, or at least what we told you should be here for. Let's look at the overall market because there's blood on the streets. And I don't mean that a person is getting murdered, but the stock market is getting murdered. And let's talk about why, or let's look at
Yeah.
some of the signs that may be leading to pointing to telling you what's going on. So let's start right here with just taking a look at a quick news headlines. So one of the headlines that we're looking at right here, and by the way, welcome to everybody who's tapping in. By the way, wait, before we go to the headlines, can we just give a shout out to all of our people that's tapping in for a second? Let's go. We got CJ saying good morning. He said the event was fire. CJ Hunter was at the live event. Terry Williams, welcome to the party. Osmond Walker. The event was very exciting. Lots of love. Wanda Redmond, good morning, Coach. Welcome to the party. So I just wanted to give a shout out to all. That's YouTube checking in. I know we live on LinkedIn and Facebook as well, but the YouTube people they feel compelled to comment. So that's what's up. All right, let's go back to here. So some of the news you can start to see as the market opens. Dow futures under pressure early Monday as the 10-year Treasury yield tops 5%. So I don't think that the Treasury yield is the only reason that the market is under pressure. You got to think about everything that's going on. We have two wars potentially that's raging. You got the war between Russia and Ukraine that's happening, and we're pseudo back in Ukraine, right? Through sending them weapons, through sending them aid and support. Then you got the Israel Palestine, terrorist attacks slash turning it into a war happening right now. And then you have us sending support in that direction as well. All the while, you got China buddying up with Ukraine, not Ukraine, I'm sorry. You got China buddying up with Russia. Then here at home, you got a UAW strike that's happening. As the UAW strikes, the automakers also laying people off because they're like, look, if we can't get the parts from that plant, we got to lay you off. So when they lay those people off, they're not entitled to any type of compensation. So people are getting hurt left and right. You got higher interest rates on cars, homes, credit cards, which is squeezing the poor and the middle class. And so I think when you add all that up, let's go to the charts. Let's just go straight to the charts. When you add all that up, what you are seeing here is the S&P 500. And this is what we saw last week and took advantage of it with put options. And I am very tempted to add some more. But when you look at what you have here, based on everything I said, none of that shapes up to be a picture that says, I think the stock market should go higher. And then from a technical standpoint, let's draw it out because a lot of people don't read charts. And this is our superpower here. This is what we really beat on our people to do is understand how charts play into this. You can see the resistance right there. Boom, right there. Boom, right there. And we saw this last week. And what did we decide to do, Coach Sutton?
It was a pivot to profit. It was, can I share our story?
Absolutely. Absolutely.
So Jason and I were having lunch, and we had both been in bullish positions, specifically in Microsoft, and it was just the bullish side of it just wasn't coming through. We had set our I'm wrong levels. We had been watching the technicals. Uh, but if any traders in the room know that taking a loss in a trade can be emotional, we do our best to manage it, but it's still like, am I going to hit the button and take the ding? And it was like, we had just done 2 days of talking about predictable, repeatable patterns. And if you wouldn't buy here, is this where if you weren't already in it, would you be buying here? And being less emotional and being tactical. And we looked at each other and we're like, we got to eat our own dog food. And no surprise. It was just a matter of saying, yeah, this is the lessons we've learned. This is what successful traders do is they see the pattern and they make a decision. And we're like, well, if it's not bullish, then it's bearish. So then we buy puts. And then it was, instead of going and buying a specific company, let's put it into the spiders. It was looking at an index, an ETF, and trading that with puts. And it was just immediately flipped. And I'll let you share the punchline, Jason, because I've got a smile on my face here today.
I mean, absolutely. And like in my personal account, I was down 40,000 on Microsoft. And then when we switched and went over to puts, I made $60,000. So we wiped out that $40,000 loss and went up $20,000. And the most important part about that is we always talk about, like, you're down the money anyway. Like sometimes when you're down 40,000, or some people may be down 4,000, they feel like, I don't want to sell this position until I break even. But the real question is, with the money that you have left, is this the best stock to make your money back in? And for us, Microsoft wasn't the best stock to make our money back in. And so we pivoted to something that was better for us to profit off of and make our money back in. And that was to buy put options and make money from stocks falling. And not only did we make our money back, we went positive. My personal account made the 40 back and went positive by 20,000. But I had to not be afraid to take that small loss before it turned into a bigger loss, because Microsoft fell more that day, and now it's down another $1.88 today. And then we would have been breaking another rule, which is we don't hold over earnings. And Microsoft is going to be reporting earnings this week, Amazon, and Meta, which is the new Facebook ticker symbol. So that was what happened in our personal life. So now back to the screen, and I hope you guys can, garner some knowledge and different mindset things that you should be thinking about when you're in a trade from everything that we share with our trade. But from a technical, so that was all from a, psychological perspective, but from a technical perspective, matter of fact, let's go Microsoft first, and then we'll come back to the S&P 500 or the SPY. Here's what we saw on Microsoft as well. If you look at Microsoft, it had, because we were bullish on Microsoft because we saw this double bottom down here. And I still like Microsoft. I just don't like it right here, right now. We saw this kind of double bottom down here, and it looks like it was setting up for what we call our W pattern. That's a technical pattern where you get a double bounce off of support, and you say, okay, this must be where the floor is for this stock. And so we're ready to go bullish. So we were bullish. However, we were bullish on Microsoft over here. So we rode this all the way down and rode it right back up. And so we weren't about to take another trip. And when we looked at these long wicks, we're like, okay, Microsoft is not holding and let alone not breaking through. So it looks like it's going to round out again right in this area. So that's why we decided to take the loss. And now you got earnings coming up. If they miss earnings, I wouldn't be surprised if Microsoft comes back down here to the 312 level. Now, rather than sit through that pullback, we took the small loss. Actually, we took the small loss right here. We took the small loss this day, and we definitely got out and didn't want to be in it or play around for it that day. Now, what does that have to do with the SPY? The SPY, we saw this bearish down trending pattern. And so the SPY had ran right back up to resistance and then started to turn around. And so we grabbed those put options and we caught that slice and we caught that slice, and life is nice, right? And so we took our profits, and here's what's important, Coach Sutton. Here's what I think we got to walk people through. Most people make the mistake when they get the put option right here, which we did. We got the put option. You caught this day and we caught this day. We said, let's take our money and run. Most people will make the mistake and they will be like, how much further can it fall? And when they're not reading the charts, they don't understand. Once it gets down here, your risk of the stock, or in this case, the SPY bouncing and going higher is greater. Your risk of this thing turning around right here is greater. Why? Because it's done it once, it's done it twice, it's done it 3 times. And we don't know, I'll put a question mark, if it's going to do it this 4th time. But what I can tell you is the risk that the market is going to bounce and potentially head back up is greater right here. So we did what good traders do. We took profit, and from a risk reward standpoint, we said the reward is not in our favor now, not to the downside. In fact, it's more risky to be bearish down here. And so we shut it down. So I think that's just super important for people to understand and be able to think through from a technical analysis and an emotional analysis, right? So most people don't evaluate their emotions when they're trading. They just like, I'm down. What am I going to do? And it's like emotional analysis is this the best place? Should I stay in this trade? Would I be in it if I wasn't already in it? Also, is this the best place to make my money back? That's emotional analysis. We got to check our emotions, which that might be a new term. You did your technical analysis, your fundamental analysis, but did you do your emotional analysis? That might be a new one for us. You know what I'm saying?
There's not too many things more personal than money. And the other side of it is the personal integrity. Some of the elements in our emotions that serve us so well in our personal life. A quitter never wins, a winner never quits. If you're so sure, put your money where your mouth is. And I believe in it. It just needs a little bit more. I'm going to be patient. And those things serve us very well in other aspects of our life, but they can be detrimental in a trading perspective. And so doing that emotional check is very important for becoming a professional trader.
Absolutely. Those of you who are watching live, or if you're watching a replay, like, do you do that emotional analysis? Do you? Because it's you have to disconnect from making money and losing money and do an emotional analysis and say, how do I feel about this right now? Am I being greedy? Am I being fearful? Am I overlooking something that I should be paying attention to because my emotions are in the way? And I think that's super important when it comes to trading, because when you mix technicals with fundamentals, so I kind of gave you a fundamental picture. There's war, there's strikes, there's higher interest rates. There's all those things that are mixing up and brewing that doesn't make for a market going higher. Then from a technical analysis standpoint, let me show you this as well, because you think like, oh, well, that's just the S&P 500 or the SPY, which is a subset of the S&P 500. But guess what? The NASDAQ was doing the same thing. If you look at the NASDAQ, this is the NASDAQ 100. Let me get the actual NASDAQ. Oh, here we go. The NASDAQ composite, for example. But you can see the NASDAQ was doing the exact same thing. And so this is all the tech stocks doing the exact same thing. You could saw that it was hitting its head. Boom, 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 boom. And so you got the S&P 500 and the NASDAQ all in a downtrend hitting its head. Then you go, well, what about the Dow Jones? And you go, well, let's look at the Dow Jones Industrial Average. Oh my goodness, what do you see here? Dow Jones, same thing. And that was the thing that we saw when we were having lunch. I said, dude, every one of the major indices is in a downtrend right now. Every one. You got the NASDAQ, you got the Dow. They're all looking the same thing, the S&P 500, which is why we switched over to puts. But at the same time now, you got everything sitting near support. But this is where people get tricked, because even though it's support, long term, these indices are going down. So it's not really to say this is where you should go bullish, but you got to be thinking if we get a bounce, where would I go bearish potentially again? So let's look at some individual stocks before we get ready to hop off. Microsoft trying to recover intraday, but it's still overall at this resistance level. And then they got earnings coming out Tuesday, tomorrow. So that is not something I want to be in. Anybody holding Tesla is just getting murdered right now. Let's just take a look at Tesla. These guys missed earnings and just whoosh, totally just kibosh. But you had an idea because you could kind of see Tesla was starting to fail right here. You saw it kind of hit its head, and then it just failed. And then earnings came. I was looking, and I'm still I'm looking for support on Tesla right around here. At least this is where I thought we would kind of see some support. And remember, support is an area, not an exact number. So it could fall a little bit below like it has and still turn around and bounce right here. We'll just have to wait and see. And this may turn into kind of a big channel in stock. Does everybody see this? You got this channel where it's like boom, boom, boom. And I will stand on this. This is why we teach technical analysis. It's not everything, but it is something to be able to see this and say, maybe I shouldn't be buying Tesla up here, or maybe I should be taking profits. And it's not until it happens that you turn around and say, like, wow, that guy was right. That random live stream I ran into, you can actually see a pattern. And like I said, patterns aren't everything, but they are something. And they're definitely something that you should be paying attention to. And maybe now you can start to say, now I can come in and start to consider Tesla around 200. But if you were buying up here, then I wish you could have found us in our live stream sooner, because these charts would have told you that maybe. It doesn't tell you everything. It's not like it's magic or hocus pocus. It's not saying absolutely 100% sell your Tesla. It is saying this is a level to pay attention up here at these red markers, because you can see Tesla has a hard time ever since the beginning of the year, or back here in May, June. Ever since June, it's had a hard time breaking through this level. And so this time was no difference. You could have saved yourself some heartache, a little bit of pain. Let's look at the automakers real quick. You got GM.
And
GM,
earnings.
what'd you say?
And earnings. I mean, look at
Oh
tomorrow.
yeah, yeah. So there was a headline that says the automakers are going to report to the UAW, Wall Street, and the UAW next week. Because here's the thing: when they report earnings, if they report that they got record profits, you just know the UAW is going to say, "Oh, y'all got record profits. Y'all got money to pay us." That is what's going to happen. UAW say, "Oh, y'all made all this money. Y'all got money to pay us." So it's a lose-lose for the automakers this week, because if they report record profits, UAW like, bet y'all can pay us. UAW don't understand that. We'll do another video about this, why it's a lose-lose for everybody. Because if they pay the UAW more, then that breaks into their record profits, which sinks their stock. So so it's just not a good situation. I want to do a separate video where I talk about what happens if the UAW wins, what happens if Ford and GM wins. It's really just, I don't think there are any winners in this situation. And then you throw in a high interest rate environment where people are hesitant to buy new cars anyway. It's just a recipe for disaster, to be quite honest with you. So, but Ford sitting down near its lows, GM, has broken the lows. If you look at this chart right here, they have broken the lows. I mean, if you move this down here, that's the low. We're not well below it, but I mean, you got to go all the way back to, pandemic is the only thing that took it even lower. So if they fall down to pandemic lows, then, they're in trouble, because that would mean that the stocks are behaving as if the world is shut down again. And that cannot be good if the world is open and you're behaving as if the world is shut down again. Now, it doesn't mean it's going to get there. We're going to get more information, tomorrow, Tuesday, on this whole little rope-a-dope situation, which will be very interesting. Sutton, anything you want to share before we wrap up? I'm just bringing in the intraday chart. You can see the overall market has bounced, which is why we don't want to go in guns blazing with puts while it's down near support. Because you can see we got this little bit of a bounce and a rebound on the day, which makes sense if you go back to this chart right here. We're most likely expecting some type of bounce, especially if Microsoft or Amazon reports positive earnings. So, any thoughts?
Yeah, and this goes back to during the Power Trades University 2 day Power Trades Live when you did that full section on day trading and some of the lessons learned. And as I look at it, I stay out of the market the first if I'm not in a trade already and I'm riding out some positions. But that first half hour, is really tempting because I had just made some good money on those puts, and as you were saying, like, oh, I should have held on, and it's like, relax, sit through that first half hour, and if you look at those intraday charts, you get all excited, and you're just like, yep, it's still going, and it's like, just chill. So for those of you that are just starting, to start testing that out, looking at that first half hour, it's sometimes referred to as that amateur hour, unless you're trading it really tight, which is a whole nother skill set. But in general, wait and let things settle out through that first half hour.
Yeah, and on that note, as a day trader, this is a common retracement. I would really be, if I was day trading today, I would actually be looking to grab puts now that it reversed back up here. I'd want to see if it's going to fail because you can see volume is declining right here on this rally back up, and we might be about to fail right here. So it could be a nice opportunity to jump in and do a nice day trade, swing trade, and say, I don't think this reversal is going to last because why would the market rally ahead of earnings if we're going to get the news on Microsoft, Ford, GM, Amazon in the next 48 hours? I don't see Lamar saying, let's get ahead of that and let's run back up. So technically, it wouldn't be a bad place to consider some puts intraday and see if you could jump in and jump out because we know the market was down to 418. So if you can catch a move from 420 down to 418, you could catch a potential $2 move, but that's assuming you got the energy to sit in front of the computer, day trade, watch this, and you have a tolerance for, daily risk because that's what you're going to be playing with, some daily risk. So anyway, thanks for hanging out with us, ladies and gentlemen. Just wanted to go live, give you a market morning power trades update. Let us know in the comments if you'd like to see more of these and what your top takeaway from this was, and the replay will be up, and we'll see you guys on the next one.